Do we need to mute my mic? I'm Jim Schultz, and this is Options Uncapped, the afternoon edition, the back half of the double feature of the Friday edition of the program. Welcome to the broadcast, man. I'm glad that you guys are here. You are in the right spot. If you are watching this show anywhere other than right here, then you are
I'm
in the
Jim
wrong
Schultz,
spot.
and
You
this
should be
is
right
Options
here
Uncapped,
in
the
the
YouTube
YouTube
chat
edition,
doing
the
one
back
thing
half
and
of
one
the
thing
double
only,
feature
pumping
of the
that
Friday
algo.
edition
So what
of
do
the
we want?
program. Welcome to the
Man, we
broadcast,
want questions.
man. I'm
What do we
glad
want?
that
We
you
want
guys
comments.
are
What do
here.
we want?
You
We
are
want
in the right
stories,
spot.
and we want
If
jokes,
you are
but
watching
they
this
must
show
be of
anywhere
the B
other
minus
than right here,
quality.
then
So
you
welcome
are
to
in
the
the wrong
show,
spot.
and
I'm
this
glad you're
is
right here.
Options
We had
Uncapped,
the
the
morning
YouTube chat
edition this
doing
morning,
one
and now we
thing
have
and
an
one thing
afternoon
only,
edition
pumping
coming the
that
Friday
algo.
edition
Now,
of the program. Before we get
man,
into
we want questions.
the market, to
What do
get
we
into
want?
the
We want
different
comments.
things,
What do we
I
want?
did
We
want to
want
remind
stories.
everyone
We want
what the
jokes.
schedule
They
is
must
for
be
anywhere
of the
other
B minus
than right here.
quality.
So the
I'm Jim
schedule
Schultz, and
moving
this
forward
is going to be
in the morning
Monday through
this
Friday,
morning, and now we have
2 o'clock
until
2:45. This is the afternoon edition.
Before we get into
And then in the morning, it's going to be Monday, Wednesday, Friday, 9:15 until about 10 o'clock. So the schedule moving forward is scheduled moving forward at least until Monday through Friday, mid 2 o'clock. We've got, and then in the morning, it's going to be Monday, Wednesday, Friday, 9:15 until about 10 o'clock. So the schedule moving forward is scheduled moving forward.
Oh, the algo. The algo's doing it. Oh, man, that's too funny. Oh, wow, this is so funny. Wow, Ryan, it looks like maybe we went too deep. I don't know. Ryan, you can just slack me. Is it normal now? So now I'm normal? Hold on, let's see. The best thing about this, and so guys, and so I appreciate, okay, are we back? Are we back? It looks like we're back. Okay, audio's fixed. Ryan, thank you so much, man. So this is why, guys, shout out to Ryan. Shout out to Ryan. He's doing all this behind the scenes, and we're testing and we're trialing, and I'm telling him to change things and fix things and whatever. And so he is doing an amazing job, guys. Shout out to Ryan because he fixed it on the fly. Look at that. He fixed it on the fly. If I had to do that myself, we'd be down for a week. If I had to do that myself, I'll see you guys at Halloween because it's over, man. It is 100% over. So thank you there, Ryan. Outstanding job. So, okay, so Ryan, can we bring up the schedule graphic? That would be great. So let's do this. Let's do this again. So we're going to be Monday through Friday, the afternoon session. That's going to be our, kind of our anchor slot. And then Monday, Wednesday, Friday, we will be doing the market open as well. So you'll have double features on Monday, double features on Wednesday, and double features on Friday. And so definitely be on the lookout for that. Hit the bell on the channel. Do all the things you need to do to clear your schedule. Not for me, for the algo. Don't do it for me. Do it for the love of the algo. So thank you there, Ryan. Okay, so let's go into the market now. Let's have a look-see at what's going on. Man, Ryan, he saved the whole season. The whole thing, he saved it. Good job, Ryan. Okay, EME S&Ps up 30. Risk-free instrument, also known as the NASDAQ Futures, which is an extremely high-risk product if you're brand new to the show. That is my very weak, mediocre attempt at internet sarcasm, and it's about as below average as it has ever been. You got the boomers up 436, which, if you are brand new to the show, the boomer index is, of course, the Dow Jones Future Index, because Dows and boomers are synonymous. They mean the same thing. The Russell 3000 up 21. You got bonds down. You got notes down. You got oil up 37 cents. You got UB40 down a little bit. You got the shifties out there celebrating. We are taking it in the kidneys a little bit on this GLD strangle. We'll talk about that in the next couple of seconds. But you got the British pound is up. The euro is up. Volatility futures are down. The Bitcoin bros. Whoa, when did the Bitcoin bros sneak in back above 70,000? Well, look at this. Okay. So we got Bitcoin back at 77,000. Okay, guys. So is it a real thing now? Is it not going to zero? Because I was assured that this thing was headed to zero. I was assured by all of the Bitcoin bears and the Bitcoin propagandists on the internet that this thing was absolutely unequivocally going to zero. Now, I'm personally pretty sure it's going to zero, but let me know. Do you have a different take on Bitcoin? Because I would love to know, and the algo is just absolutely dying to know. And so Bitcoin up $2,400. You got volatility futures. Let me grab, man, Ryan. So Ryan got me these new drawing tools, man. This is so amazing. Like, he's just, man, guys, it's really, really, really amazing. I absolutely feel like I won the lottery, man. I really do, right? We got Ryan. We got Grace, who's in the chat. And Grace, she runs the whole operation, by the way. She's the one that's in charge. And so we got Grace, we got Ryan, I got my boy John, who's kind of behind the scenes doing some things in a rover type capacity. 100% feel like I won the lottery. And so volatility, spot volatility, the old VIX down 77 cents and down to 15 and a quarter. Okay, so there isn't really much going on in the market. So here's what I want to do. So it's been a few days. I'm going to talk about my positions right now. Just kind of let's talk through these guys. Let's kind of wax poetic on each position. Kind of summons up, you know, the FTTP from yesteryear, right? The from theory to practice fan from yesteryear. But we would just comb through the portfolio, right? We would comb through the positions. Now, I'm in a different position now because I'm building out the book. I'm building out the portfolio. So, you know, it's a little bit different than FTTP, which was kind of a, you know, just kind of an ever-evolving type of thing, which this will get to that point too. But for now, you know, it's building and also commenting, and there's a lot of new things happening around the edges with EQTs and futures and all those things. And so a few things. Number one, if you have questions, this would be a great time to put your question in the chat box, because I would say I'm about 10 to 15% done with my intro. So in the next 19 to 37 minutes, I will be done with my intro, which leaves us about 30 to 45 seconds to get to your questions. So I would drop them in the chat and I'll try to get to as many as I can. And so that's the first thing. The second thing, specifically about EQTs. Remember, these are intent. Now, there wasn't any this morning, and I tried to do them. Do I still have that order outstanding? I don't think I do. No, I don't. I thought I left it in my book. I do that all the time. I'm sure you guys do that too on your end. It happens to me all the time. And so always look at your book. Look at your book. Look at your book when you're done with your session or whatever. Make sure there's nothing dangling out there. Make sure there's nothing just kind of free floating off in the ether when it comes to an order that you really don't want to have out there anymore. And so when it comes to EQTs, though, specifically, remember that these are intended to be very short-term in nature most of the time. So it really is a smash and grab strategy where my profit target on like a NASDAQ EQT is typically between 25 and 45. And so 25 on the lower end, 45 on the higher end. Now, sometimes I'll go for more than that depending on the market conditions or market circumstances or what have you, especially in like higher volatility markets. But I'm not typically going for like 100, 150, 200 points. Those are pretty rare. They still happen from time to time, but they're not going to be the expected move. They're not going to be the Betty Crocker recipe, the default setting. And so 25 to 45 for the NASDAQ is what I'm typically targeting. For the S&Ps, usually 8 to maybe 15 points, I would say. I'm probably somewhere in that range because I don't really want these to be long-lived trades. They're not intended to ride the wave. They're not intended to play the momentum. We're taking the other side of all that. Now, I have nothing but love for all the momentum bros and bro sets that might be out there. They typically get along really well with the P&L open bros. I love those guys too. And so when it comes to, you know, what I'm doing, it is very much taking the other side of that type of strategy or that type of philosophy. But I have nothing but respect, nothing but the utmost respect for anybody that gets in the sandbox and gets in the arena with their hard-earned capital and puts it to use in the manner that they best see fit. Which, oh, by the way, on that note, everything I talk about is education. Everything I talk about is education, mostly, and maybe a wee little bit of below average entertainment. None of this is intended to be a trade recommendation. None of this is intended to be financial advice, right? You should not listen to me. I am a random guy on the internet. You need to consult your tax professional. You need to consult your financial professional. I am neither one of those things. Okay, so let's talk about what's going on in the portfolio. All right, so let's see. This is good. I see some questions coming in. Again, more questions would be good. This is the day to do it. I say, oh, okay, so MES, GLD, and IBM. Let's see, MES. So for MES, this was a short put that we sold just a couple of days ago. We did this trade. Let me see here. I'm gonna make sure I have multiple drawing tools going on here. So we did this trade, MES. This was a put that we sold back on 8/19. Oh, wait. What am I doing? I'm so out of my game. I am so off my game and out of my element. What am I doing? We don't need the activity tab. We need the Allison chains. So if I click on MES and I bring up my chains here, right? Like you would look at these chains and you would say, oh, wait a second. They must have updated the platform. That says order chains. That's a mistake. It should say Allison chains. We know this. We know this from the FTTP days, right? And it could be a number of Alice in Chains. It could be a rooster, obviously. It could be Man in the Box, obviously. But if you want to go just a bit further down the pathway forward through the forest, might I suggest an I Stay Away? Might I even suggest a Heaven Beside Me? Right now, if you really want to get crazy, you can go with Dem Bones. You can go with Grind. You can go with Rain When I Die. These are all amazing jams, but you got to make sure you're in that right kind of mood. That mood where you're like, man, I'm not really feeling too good about things right now. That is exactly the mood you want to be in if you're going to put on some Rain When I Die. But it's an amazing song. It is a fantastic jam. So 819, we did this trade. We did it for 68 points. And then you can see, look at this. Oh, you guys are seeing, oh man, you guys are seeing the sneak joint now. Man, you're seeing all the things I did back yesteryear, back in June. Man, I don't think I want y'all to see this. No, that's fine. It's all out in the open. I mean, it's all out in the open. It's full transparency, right? And so these were the last few trades I did before I kind of shut down. I think I stopped trading. I think the last trade I made in this account, and this was the account that I was running all the tests, I was running all the trials for the trading lab, which you can sign up for, by the way, totally free in the description. If you want to know more about what I'm building specifically, how you could be a part of it, how you could support the efforts, how you could do all those things, you can sign up for the trading lab. I'll also send you ideas and insights and inspiration straight to your spam folder. Don't even worry about it. But as I was building and testing and trialing and experimenting, made many trades this year, which is why I burned so much in commissions. But it's okay. It was fine because I wanted to gather as much evidence and as much data as I possibly could. Well, I stopped right around the beginning part of July because I knew after Tasty Bastille Day, pour out a little banana natty for our fallen comrades, of course. And if you are brand new to the show, because there are so many new people, what is a banana natty? The people need to know. So a banana natty, right? This is a combination of a banana daiquiri and natty light ice. Combo pack, combo meal, cannot be separated. The banana daiquiri comes from the fact that when Autumn and I got married, we went on our honeymoon to Jamaica. I think we went to Negril, Jamaica, if I'm not mistaken. I mean, man, it'll be 17 years in October. I mean, it's a 60 delta. We make it to October 10th. But let's assume that we do, just for the sake of this example. It'll be 17 years in October. Well, we went on our honeymoon in Jamaica, and for a week straight, we're having fun, we're having drinks, whatever. I discovered the greatness. I had never had one before. I discovered the greatness that is the banana daiquiri. And so I'd be sitting, and with the little umbrella in the glass, of course, I'd be sitting on the lawn chairs, sitting by the ocean, just sipping on the scissor that is a banana daiquiri. It was absolutely phenomenal. Oh my gosh, I had like 3, 4, 5, 6, 7 a day, whatever it was. It was amazing. So that's where the banana daiquiri comes from. And then Natty Light Ice, it just speaks for itself, right? I mean, there's so much nostalgia that is connected to a Natty Light Ice. Because we've all been there. I've been there. You've probably been there. You're in college. You're having fun with your friends. You want to get some drinks, whatever. But you don't have any money. So what do? You're looking at the grocery store aisle, and what do you see? You see a 30-pack of Natty Light Ice for a nickel. And you're like, I don't know, man. It was expired 2 months ago, but let's do it. And so you do it, and yeah, it tastes like rubbing alcohol going down your throat, but it's okay because it was a nickel. And so now what we've done, we've taken the greatness of the banana daiquiri and the nostalgia of Natty Light Ice, and we have combined them together into a banana natty. And so it is a banana daiquiri with a Natty Light Ice base. And so that is what a banana natty is. And so you are brought up to speed on the banana natty. But anyway, I digress. And so, okay, so we're brought up to speed on banana natties. We're sort of brought up to speed on MES, but not really. It's very much a do nothing. It's out of the money. We're not going to do anything. And then that's going to be that. Okay, so let's go to the next position. So GLD, this is a strangle. Now we're getting hurt today, obviously, because gold is ripping to the upside. I mean, the shifties are celebrating. The Hump Brothers are probably out there getting the cheese and pepperoni ready for the Friday night rush, of course. And so 370, 470, again, it's do nothing, guys. It's do nothing. I know I'm throwing a lot of newness at you guys with new strategies and whatever, and it's going to be fun. It's going to be fun. The coming days and weeks and months, I can't wait. It's going to be awesome. And I think we're off to a really good start here. But again, if you're out of the money, the default setting is not doing a single thing. The default setting is doing absolutely nothing and just allowing the greatness of the out of the money strategy or position that your strategy is in to actually carry you forward to the finish line. And so for GLD, I'm not going to do anything. Now, could there be a time where I might adjust my deltas a little bit? Yeah, it's possible. Again, you don't want to be so rigid that you never kind of deviate off of the default setting. The default setting doesn't mean the knob is broken and it's, fixated in that position. It just means that this is what I typically like to do. And I need a good reason to move off of that, which I will do from time to time. But yeah, for right now, it's way too early. Looking at the chains again, we just did this trade. What was it? Was it this morning? No, it was yesterday. We did this trade yesterday morning. So we sit tight, we do nothing. And then IBM, obviously, we sold this trade earlier this morning. We do nothing. We just sit tight. It's big blue. What could possibly go wrong? And then that's that. And then as far as like new positions, I mean, volatility is so low right now. I'm not really interested in that. Later on in the day, equilibrium trades, I will do them from time to time, but it's mostly concentrated in the morning. I will do some evening equilibrium trades too, especially in the metals, because the metals are typically pretty active in the evening, especially now that gold and silver are kind of picking up steam. And so I will do some things in the evening. If I do that, I haven't done evening trades in a while, but from time to time I will do that. And then the only other thing I want to say was, no, I think that's it. Oh yeah, you guys aren't ready for my SPX end of day trades yet. You're definitely not ready for that. You can't be ready for that because I'm not ready for that, and it's my trade, and so we're not gonna do that yet. We'll save that guy to give you guys a reason to come back. Otherwise, why would you come back? And so, all right, I've got some questions coming in from you guys, which is awesome, and I see you guys in the chat. Man, let me see if I can. Man, look at you guys. Man, I appreciate you guys so much. You guys really hit that algo pretty hard with the audio situation earlier. That's awesome. We should do that every show, Ryan, just to kind of trick YouTube into thinking this is quality programming. Let's see. Oh, this is kind of funny. I see derivative. That's hard. That's really, really hard to say live, but we did it. Earlier on the audio thing, it says 1 million Dr. J's dropping knowledge. That's funny. I can't wait to listen to the playback later because we are trying to fine tune our audio. I think we've come a long way. I think we've done a good job of eliminating the dehumidifier in the background. Hopefully you guys can't hear that now. And I have to run it because it's 1,000 degrees outside. And in my little studio back here, it gets really, really moist if I don't run the dehumidifier. And so, yeah, I just said that for Grace because I know she's on the stream right now and she loves that word. And so, okay, let's go ahead. Let's go to some questions, though. So, number one, Chris Anderson. And I see you guys in the chat, by the way. Let me give some shout-outs really quick. Ross is here. Too Late Jake is here. Ryan LP is here. Ash Finn is here. Man, Griffin Jones is here. Selling some NQ puts. Tiny Delta. Ooh, Griffin. You know how I feel about that, man. Be careful. 10 Delta. I mean, again, you got to do whatever you best see fit. Of course, I would never try and tell you what to do. I don't love the Tiny Deltas, though. Because with a tiny delta comes a tiny credit. And 10 delta I think is okay, in my personal opinion. Of course, you make up your own mind. When you start getting into single digits, though, it's a little trickier because the return just doesn't justify the risk, in my humble opinion. But I see BBB Fine is here. Ram Bashar is here. Let's see. Brian Dowdy is here, man. Everybody came out of the woodwork with the audio problem. Yeah, this may become a staple. Of the show. And oh, by the way, I still have not seen the intro song. You guys have not nailed it. I've tried to scan most, if not all, the comments or the questions, and you guys have not gotten it yet. Again, just to bring you up to speed. Number one, it doesn't have anything to do with money. Number two, what was number two? Yeah, it was not released after 2016. And then number three, it is not a popular song. Like, it's not something you hear all the time. You'll hear it once in a while, but it's not amazing. Okay. I think it's amazing. So Chris Anderson says EQTs equals equities. It's a great question there, Chris. No. So an EQT stands for an equilibrium trade. It's my own term. It's very similar to the proximity effect. It's very similar to Banana Natty in that regard. I have many of my own terms coming on down the chutes. But again, I can't overwhelm you guys, man. We got to give them to you in bite-sized chunks. I mean, I'm giving you EQTs. I mean, coming on down the chutes are lepto levels. Coming on down the chutes is my world-famous Toto strategy. And by world-famous, I mean I'm the only one that knows about it, right? And so pretty soon, all these things are going to be cut loose into the wilderness. But we got to do one thing at a time and try to nail that thing down because I really do want this to be about simplicity. I really do want this to be something where things do feel kind of streamlined and kind of simplified. I don't want it to feel like you are, just constantly drinking from a fire hose. But an EQ2 is an equilibrium trade. And it's a trade that I'm trying to do typically in the morning around the market open window. Sometimes the metals window, definitely for economic numbers. And then when volatility is high, like when the VIX is around like 19 or 20 or higher, there's so much movement throughout the day. The equilibrium window is kind of always open. But that's definitely not the case now because volatility is much, much lower with the VIX at like 14 or 15. And so this is not kind of an all day long equilibrium situation, in my humble opinion. So that's what EQT means. Let's see. Aris says, the question is, now this is why I'm here. These are the questions that I want to hear. Let's go. Aris says, the question is Alice in Chains or Nirvana. Answer this if you can. Oh, I 100% can. It is definitely Alice in Chains. Definitely Alice in Chains. Now, Nirvana is great because, they're both 90s rock bands. I'm pretty sure they're both 90s. I know Nirvana is 90s. I don't think Alice in Chains was late 80s. I'm pretty sure, somebody help me out in the chat, Nirvana, I want to say Nirvana was 92. Was Alice in Chains the same? Somebody help me out in the chat. Let me know let me know when Man in the Box was released. That's really all I need to know. When was Man in the Box released? And then for Nirvana, it would be what? Smells Like Teen Spirit, I guess, would be their #1 jam, I think. Even Flow is Pearl Jam, I think. I'm probably mixing up all my 90s bands. But I would definitely go Alice in Chains without question. Nirvana is obviously great, but I never really got into them. Let's see. E-Media. What's going on there, E-Media? E-Media says, I see Mixing Out Loud says they're both late 80s. Really? 1990. Drew coming in clutch there. Really? They were that? Alice in Chains is 87. Okay, so I was kind of right then. All right, 87. Wow. Crazy. Man in the Box was 1990. Okay, very interesting. But Nirvana was late 80s? That's crazy. Huh, interesting. Because when you think about, not necessarily Alice in Chains, but I'm a millennial. I'm 45. When I think about Nirvana, it's a 90s band. It's not an 80s band. It's a 90s band. And so Alice in Chains, I feel like there's more of a crossover there, but maybe I'm alone in that regard. But yeah. And so Smells Like Teen Spirit 1991. Thank you there, Tim. That's awesome. E-Media says, Jim, check your X holdings in the follow page. Follow page? Nah, man, they scrubbed that thing out of existence along with your boy. Your GLD September call is no good, but the SanDisk September call spread is good. Yeah, I mean, when FTTP ended on August 7th, RIP for FTTP, that account obviously went to the wayside with it. I don't even know what happened with that account, to be honest with you. I'm sure they just flattened everything out, I would imagine. I was the only one that was trading that account, while I was running the show for 10 years. And so that was obviously really, really cool. But I don't know what happened to those positions. I wasn't following them because I knew it was just going to kind of float off into the ether. And so, yeah, let's see. Misos says, I like to trade zebras, but those are really 50-50 type trades. I agree. Is there a way to improve pop and still make a similar return on capital? With a zebra? So zebra is really interesting, right? So if I'm going to set up a zebra, I don't do a ton of zebras, but I'll mix them in from time to time. And oh, by the way, guys, stay tuned. I don't know if you know this, right? But Liz and Jenny are making a comeback. Guys, Liz and Jenny are making a comeback. Tell everybody that you know. Tell everybody that you know. Tell everybody that you've met. Tell everybody that you might possibly meet in the future. Liz and Jenny are making a comeback to a YouTube channel near you, coming sometime very, very soon. So I don't do a ton of zebras, so this should be a great question for them, obviously, when they make that comeback. But we can walk through some of the basics here. Like if I do, if I go to AMD, for example, and let's say I wanted to set up a zebra. I might go into September and I want to buy a couple 75 delta calls and then sell about a 50 delta call. So this would give me about 100 deltas to the upside. Wow, that's a pretty expensive. I picked a real doozy for an example for AMD. But if I do a 430, 480, and this is probably not the best example. It's $8,000. It's not crazy, but let's choose something a little bit lower priced. Let's do like let's see. If we do, Let me see. I'm trying to think. Which is dangerous. Very dangerous. What if I do, let's just do like Amazon. Amazon at $250. That's fine. So if I go to September, if I sell like if I buy a 73 Delta call and then I sell a 260, I'm mixing things up. If I buy the 245 call strike, which is about a 73 Delta, and then I sell the 260 call strike, which is about a 48 Delta, and then I double up on the two that I buy, this is going to be your classic Zebra setup where you see I'm setting this up with right about, I don't want that. Hold on. Let me grab, that's not the one that I want. That's the one that I want. If I grab my, wait, hold on. Let's do, yeah. Hang on. Why is that being weird? Hold on. Let's do that. Okay, we should have it now. If I set up this Zebra, that's about 100 Delta, and that's what you want, right? When you do a Zebra strategy, it's basically going to be a stock substitute. So it's not clear to me, which doesn't mean it can't be done. Maybe it can be done, but it's not clear to me how I would potentially improve my probability of profit on order entry. Now, there may be some things I can do down the road. There may be some things I can do like later on with adjustments and mechanics and, nifty management techniques that could allow me to potentially improve the probability of this trade. But it's essentially a stock substitute. And so it's going to be I'm going to be quite limited in what I can do to potentially improve the probability of profit on this strategy. Simply because, the spirit of the strategy is as a stock substitute. And so I don't know of anything that I could do that's really obvious there, Mesos. And so hopefully that helps a little bit. At least it gives you some things to think about. Let's see. Stefan, what is going on there, my friend? Dr. Jim, as a non-U.S. trader, how do you suggest to manage the change between, for example, USD to euros to don't blow away the profit? Done. That's hard, man. And I honestly don't really know the best way to handle that because I don't have any frontline experience of doing that. And I don't even really have, I haven't done too many like currency conversions, like with trading accounts and things like that. Like we had to do a lot of that stuff in school in terms of like interest rate arbitrage and like cost of carry arbitrage and the Big Mac phenomenon, like how much is a Big Mac in Europe and how much is a Big Mac in the US? And, if I buy Big Macs here and I sell them over there, I keep my 1.5 cents per transaction, right? We did all that in school. But in terms of actually doing it on the front lines, in the arena, I really wish I could help you there, Stefano, but I'm not really sure. I mean, you're making the conversion, right? Like you're obviously trading in euros potentially and then converting back to USD or vice versa. You're obviously going to be subject to exchange rate risk. You're going to be subject to the floating nature of the currency. And so I know a lot of traders, one thing I do know, I don't know how to do this, but I know a lot of traders are doing this. They have hedges in place that allow them to focus on their trading that more or less minimizes or maybe even completely mitigates or eliminates the currency risk. I don't have the skill set necessary to help you do that. I wish I did, but I don't. But I know it can be done, and I know a lot of traders that trade in your situation are doing it. So maybe that will send you down a rabbit hole in Claude or Gemini or ChatGPT, right? Or Copilot. No, just kidding. Nobody's using Copilot. But Gemini and Claude and ChatGPT, maybe that could help you out to kind of get you going down the old path there. So Tim, 6360 is in the house, says, is it better to A, buy back the call and recoup some of that debit by selling nearer term calls, or B, to roll out further for a higher strike for even a small credit such as June 27? So I'm not sure what the context is here, Tim, what the question is. Maybe there was a previous comment that I wasn't able to grab onto. And so I'm thinking maybe, are you talking about a covered call? Since I'm not sure, Tim, I'm gonna leave this one because I'm not sure. There might be more context that I'm missing here. Yeah. So I'm gonna let that one. I'm gonna leave that one. Just sit tight. And I caught my eye. You guys are talking about sourdough in the chat. Why am I not part of this conversation? Right? Because no one loves sourdough more than me. Like, I absolutely love sourdough. I will walk miles and miles and miles to get sourdough. And by that, I mean, I'll give you 10 to 20 feet to get to my car, to go get some sourdough. But sourdough, man, that is some special stuff. If you find some homemade sourdough, like that is some really, really, really good stuff. And so good job out of you guys with the sourdough conversation that is in the chat. And so, oh, I got to make this announcement. Oh my gosh. So like I said, so Ryan, you can bring me back on the soapbox here for this one, just to keep him guessing a little bit. So like I said, I want to do things differently. I want to do things that have not been done before. And we're going to do all that. So what I'm about to announce is not that yet. This is kind of a little bit of a teaser into that. But I want to bring back something. So this is something that certainly has been done before. And this is actually something that you guys have seen me do before. And I want to try to set it up for next Friday afternoon. And if it goes well, it may become a staple for the afternoon streams. Now, to continue to add mystery and to continue to add just a wee little bit of suspense to where you'll be watching Options Uncapped and you're like, man, am I watching Dr. Jim or am I watching Jason Bourne? You're not exactly sure. What do you think? I can assure you that you're not watching Jason Bourne. What do you think I'm going to do next Friday for the show? Now, there's a huge hint. I've done it before on the Tasty Network, right? What do you guys think we're going to do for the show? We've done it before, and I think it's going to be a ton of fun. And so let me know. And again, you guys still haven't picked the song yet. And so, yeah, you guys got to get this song nailed down. Okay. I see one guess just came in from my man Ross. Options 101, teaching a newbie. No, but that is a great guess. But I will give you a hint. You are close. You are close. Okay, so now I'm giving out. You guys should get this by the end of the show. If you guys don't get this by the end of the show, I think we might have to shut the whole thing down. Like, we're off to an amazing start. Ryan, you did a great job. You know, I'll give you some furlough pay. Like, we'll get you some severance, whatever. But we're just going to have to shut this thing down. Grace, you've done an amazing job. Again, you know, you can see OUHR for your final paychecks and what have you. But we're going to have to shut this thing down. If they can't figure this out with that hint, I don't know what we're going to do. Anyway, let me get back to some questions while you guys figure it out. Okay, so Jonathan Nav123 says, what are some tools to backtest option strategies? I actually don't know. Hang on, I'm getting super distracted because you guys are making me laugh. Aspen just said a pre-recorded show with Dr. Jim in the chat. So I actually did that. I did that before. And that's an excellent guess, but that's not it either. That's such a good guess. Oh, I actually forgot about that. We're going to have to do that too. Like, one day when you guys think it's going to be a live show, it's not going to be a live show. It's going to be a pre-recorded show, so your boy gets that watch time. And I'm going to be in the chat. And I'll be in the chat as like my personal account. I'll go ahead and I'll let Options Uncapped just do their thing with Grace and Ryan or whatever. Oh my gosh, that's too funny. That is too funny. That's really, really funny. Bring a guest? No. Pre-recorded show? No. Calculated risk? No. And so it's too funny. Okay, let me get back to this question. What are some tools to backtest option strategies? I'm sorry the show's off the rails, but this is mid-season form, right? And so if you are brand new, right, and you're checking out and you're not sure what to expect, this is exactly what you should expect. Where we do 10 to 20 to maybe 30% actual trading, which I would like to think is somewhat valuable. But then there are a lot of other things that do happen around the edges. And so just be forewarned, there are many other places where you could spend your time and attention when it comes to, the market. But what are some tools to backtest option strategies? I actually don't know. Because I'm not a huge fan of backtesting. I'm really, truly not. I like it to give us some universal principles, right? But I think we have that now. And now if you're brand new, you're like, I don't have that. Well, we'll bring you up to speed on kind of the core principles from kind of a tasty world, which are still driving everything I'm doing. They're even the core principle behind the EQT. Even though you see the EQT and you're like, hey, there was no premium in the EQT. Not yet, right? Not on trade entry, but that's all by design. Because I want that to feel the full weight of the move. So that way, if it works, I get paid a lot more efficiently. I get paid a lot more quickly. If it doesn't work, that's where the premium kind of comes into the mix. But, the core principles I think that are driving what we're doing are the absolute key. So the core principles behind what we're doing are, selling premium, high volatility, high probability, and then having the adjustment mechanics and the adjustment protocols ready to go, like in place. And so that is incredibly, incredibly valuable when it comes to, understanding what we're trying to do from from an active trader, premium seller standpoint. And so, let's see here. Let's see. Let me go back to the questions. So hopefully that helps you a little bit there. That came in from, who'd that come in from? That came in from Jonathan. Okay, another great question from Dew Randall. What's going on there, Christopher? I appreciate you there, my friend, very, very much. How far do you wait to make your strangle adjustment, the untested side? Okay, this is a great question. And I prefer to wait at least until one strike is tested. So I want to see one strike get tested before I typically make an adjustment. Now, this is my default setting, right? I will deviate from this from time to time, but there's a reason why it's the default setting. And being the default setting, this is what I am going to do most of the time. Like most of the time, I am going to, like Ryan, you can bring us back into the market. Like if I look at GLD here, right? I'm going to wait until GLD hits 370 or 470 until I do anything. Right? I really like to sit tight and let the strategy work. I have learned through trial and error, through testing and all the different things, and building OU. I feel like a lot of times when I make adjustments, I'm just chasing my tail. Right? When I make adjustments, I'm just exposing myself to more whipsaw risk. Now, sometimes it can make sense to do that if you really want to control your portfolio delta and your portfolio risk a lot more effectively. So again, that's why it's not a broken knob that can never be turned. It's just a default setting. And this is what I typically go with because I'm really trying to build something that is simpler. I'm really trying to build something that requires actually less management, that is a lot more hands-off. Now, again, that may seem contradictory to what you've seen the last couple of days in EQTs and whatever, but my hope is after 4, 6, 8, 37 weeks, it begins to make some sense to where you're like, all right, I'm starting to see how the pieces come together. I'm starting to see how the puzzle begins to, kind of take shape. That's my goal. That's my objective, but it can't all be done in 1 or 2 or 3 days, especially with the newness of some of the novel things that we're doing. But Christopher, I'm going to sit tight until one of the strikes is tested, most likely. And so that to me is what, kind of unleashes the power of the strangle with the premium on both sides. And so hopefully that helps you a little bit there, my friend. Let's see. Oh, Mikos. Mikos says, here we go. Uncapped and Liz and Jenny crossover event coming soon. Maybe so. You just never know. It is not impossible. And so, but let me see here. Are there any other guesses as to what we're going to do next Friday? I don't see any. I still don't see it. I can't believe it. I cannot believe it. You guys have not gotten it yet. And I'm not going to tell you. I'm not going to tell you at all. You're going to have to just wait and watch the show until it actually happens. Okay, interesting. Let's go to, let's see, Hamid Taba. I think I'm saying that right. With VIX being in the 15s range, is selling a strangle on MES a good idea, or maybe wait for a higher VIX? Okay, so generally speaking, or again, I can't tell you what to do. I would never even begin to tell you what to do. So this is purely as an educational teaching point only. Higher volatility is a better environment to sell premium. The studies all back this up. All the tasty research backs this up. And so selling an MES strangle when the VIX is at 15, that's a little bit tricky. That's a little bit on the lower end. And so I would maybe prefer to wait until VIX 17, VIX 18, VIX 19. So generally speaking, not my favorite environment to sell premium. That's why, the other day we sold this put in MES, which is, it's doing okay now, but we did that on a little bit of a volatility pop, and then we sold the strangle in GLD because the IV rank of GLD is, it's over 40 now. Now MES, the IV rank of MES is 30, so that's actually, I kind of revised what I said a second ago. The VIX at 15 is not amazing, but MES IV rank at 30 is actually not that bad for selling premium. And so when you look at the market kind of writ large with the VIX at 15, it's like, okay, that's not super great. But when you actually dial in, where that 15 might sit relative to the previous 12 months, it's like, man, the S&P 500 futures are actually not that bad right now. And so this actually could be an environment to sell some premium because at the end of the day, looking at market-wide volatility is very helpful to get a barometer of what might be happening kind of writ large. But it's also very helpful to dial in and see what is happening on the individual stock level, what is happening on the individual index level, because that will tell me and kind of key me in and clue me into what opportunities might be, available in that actual stock. And speaking of IVR and IV, Your boy's got a brand new YouTube video coming out. She might even come out tonight. And so as long as I can get the editing done in the next couple of hours or whatever, and I am desperate for, am dying for that watch time. So I am counting on you guys to watch that video when it comes out. And so that's coming out, but hopefully that helps you a little bit there, Hamid Taba. I appreciate the question very, very much. Let's see here. We got some more, man, great questions today. This is awesome. Man, I mean, when there's afternoons that are slow, we'll probably just do this. This is great, man. Because this gives you guys a chance to get your questions answered. And this is really, really, really awesome. Let's see. Mr. Pillows, what's going on? Would you sell shorter date covered calls against the zebra or keep it the same expiration? You could sell it. I mean, it's kind of like, I would answer that the same way I would answer any covered call, right? It kind of depends on how you like to trade covered calls. Since it is a stock substitute, right, then you could sell shorter dated calls against that zebra. Which that actually reminds me, like going back to the previous question, who asked me about the zebras before? Yeah, Misos. Yeah, so Misos, if you're still here, like this actually is a way for us to maybe improve the probability of a zebra. Remembering that it's a stock substitute, I could just sell another call that's maybe like 30 delta, 20 delta, whatever. I could improve the probability that way. I'm capping my upside just like I do with a long stock when I sell a call. But yeah, it's kind of the same philosophy and the exact same mechanics, really. And so that could actually work. So thank you so much for this question there, Mr. Pillows. If I'm doing covered calls, like when I do covered calls, they're typically longer term plays. They're typically intended to be things I'm doing against like an investment style covered call. I'm going to hold this for a while. I'm just going to hold this guy indefinitely. And so because of that, I really like typically going 30, 45, 60 days out. I'm not typically trying to sell weekly calls against, my stock or try to, sell options for income and all that garbage that you hear out there. Oh, we're going to get into all that. Man, I got that YouTube video. Man, it is queued up and ready to go. I got to wait till I'm in the right mood to record that one. But you can bet your bottom biscuit it's coming soon. So, Mr. Pillows, hopefully that helps a little bit. Let's see. Alessa Androbe. What do you think about buying puts on SpaceX expiring right after the 180s locking period after which employees can sell off their stock? Has it already been priced in? Great question there, Alessa. Thank you so much for being here. And I really appreciate you so very much. So don't typically like buying premium, just generally speaking. So buying calls or buying puts like outright like that, don't really like that because I don't want to battle against the time decay. I don't want to put myself in a position to where I have to be directionally right. I think that's a really hard game to play. I respect the fact that a lot of traders out there like to play that game. Some are supposedly successful at playing that game. I think that's great. I think that's amazing. I don't see it that way, though. I want to have the probabilities on my side. I want to make the stock beat me. So just kind of writ large, I don't really love buying puts. I also don't really like trying to kind of, what's the right way to say this? Take advantage of or exploit these things that are like super obvious. Right? Like lockup periods expiring or like M&A activity or like whatever else it might be. You fill in the blank. Because I really feel like trading the news, which is essentially what this is very, very hard to do. Maybe even impossible. And so because of that, it's not typically something I would do. I would kind of just pay no mind to that. And I honestly chalk it up to randomness and unpredictability. But let's try to get to a couple more. We can maybe get to a couple more before the show's over here. Red Baron, what's going on there, Red Baron? I have some short puts I'm massively underwater on. Held through Walmart earnings, rolled the dice and lost. What's your preferred management technique if you don't expect a quick recovery? See, this is the beauty of the short put, which that YouTube video is already out there if you haven't seen it yet. You can just hold the stock, right? You can just hold the stock and be like, hey, I'm a long-term investor in Walmart now, right? Now, again, I can't tell you what to do, so this is what I myself would do. You have to decide what makes the most sense for you in your unique situation. But that's a huge advantage with a short put. Because again, I mean, is the future bright for Walmart? I mean, I don't know. Nobody knows. But generally speaking, with positive drift and positive risk premium, I mean, I would feel okay doing that. And so let's see. Okay, I got one more. I think I see one more. Yeah. This is great. So East Coast, you talk about implied volatilities versus realized IV. Does it really make more sense to? And then here we go. Oh man, there's a bunch more that came in. Yeah, we're about done though. I may go an extra minute over. Let's see. And by an extra minute, I mean maybe 4 to 5. Does it make more sense to sell options for theta during high implied volatility environments, or does the math show that realized or implied volatility are similar? Great question. Excellent question. This is honestly why we do what we do. This is why we've done what we've done for the last 10 years, and this is why I'm continuing to do what I'm doing here with OU. The difference between, in fact, here, let me get my pen, because this is actually a perfect time for it. So the difference between IV and RV, there, East Coast Duncan, is crucial. Because if there is a quote-unquote edge to be had with options, this is it. Over time, historically, on average, implied volatility is greater than realized volatility. Now, that doesn't mean it's always going to happen. That doesn't mean it's a guarantee. That doesn't mean that there won't be periods of time when the realized volatility runs super hot relative to the implied volatility. That is going to happen. It has happened. It will happen again. However, if that phenomenon holds true, which I see no reason why it won't, for reasons I probably can't unpack right now because we are pretty close to the end of the show. Options are priced based on implied volatility. They're priced based on the IV. So if you're actually collecting a price that's based on the higher IV, but over time, the actual moves and the fluctuations in the market are based on the RV, because that is the actual volatility that actually transpires in the marketplace, then it's almost like you're being overcompensated. It's almost like you're making a little bit too much money. You're being compensated too much for the volatility that you have to endure. Now, again, it's been said before, and man, I'll be darned if I cannot remember who said it. For every gimme, there's a gotcha. Well, if you got the gimme of a higher implied volatility, you also have to be ready to absorb the gotcha of outlier moves, the gotcha of undefined risk. And so there is no free lunch, not even the tuna fish and applesauce. Sometimes they charge a premium for that stuff. And so you have to, that's actually never happened, not in the history of lunches. But you have to understand what you're signing up for, and that is the game that we're playing, though. So East Coast Duncan, I hope that helps. But the IV being greater than RV is the key. It is the critical thing that we're doing. And so, okay, guys, I got to go. And it's funny, I see you guys. It's almost like Jim owns the network and can run as long as he wants. Yeah, I mean, sort of works that way. But I got to be mindful. I mean, Ryan and Grace and everybody's working. And I got to give you guys a reason to come back. Don't worry. Don't worry. Longer streams, they're in the noggin. They are absolutely in the pipeline. But I appreciate you guys, man. I appreciate you guys so very much. Don't forget, we have a double feature coming up on Monday too. So I will see you guys the Monday market open. I will see you for the Monday afternoon show. In the meantime, if I can ever help you guys in any way, please shoot me an email. I'm Jim@optionsuncapped.com. We can connect on Twitter. I'm @optionsuncapped. Sign up for the trading lab down in the description, and have a great week, and I'll see you guys on Monday.